This is Taking Stock on Bloomberg. I'm Pimm Fox. All right, let's find out more about the health of the commercial real estate market. Are banks really getting rid of loans and properties that are soured on their books? Let's find out more from the chairman of Carlton Advisory Services. We have Howard Michaels, and also I want to introduce Joe Korbar, managing director of Carlton Advisory Services. Gentlemen, welcome to Bloomberg.
Hi.
Howard,
Hi.
so what's the status right now with commercial real estate? Are people really buying up properties? Are banks getting them off their books?
Well, I think there's two sectors going. You have the banks, which are continuing to sell loans, and we want to talk about that. But you also now have regular real estate owners who were, for the first time since the crunch really started, starting to sell their properties. So you just had 600 Lexington Avenue in New York, which went to market, and SL Green paid almost $700 a foot for that building. You have 340 Madison. You have 125 Park. So now,
let me just break it in. These are not distressed sales, at least it seems by the prices that you're talking about.
That's exactly right. These are regular owners of, large owners, but owners of properties that are selling property in an ordinary course because they want to trade out the assets. So this is not Deutsche Bank selling the Maclo assets. This is business as usual.
So this is good for volume. Joe, come in on this topic. I mean, does this mean that we're getting to see more transactions, more liquidity, and that's good for price discovery for everybody?
Absolutely. I mean, FDIC is coming out with some big sales. They came out in the first quarter with $1 billion, another $2.5 billion that's coming out in the second quarter, third quarter, and obviously we're selling about $1.5 billion through our platform. So sellers are definitely motivated to move product, and at the same time, investors are very anxious.
Howard, where's the money coming from?
In the 600 Lex, it came from SL Green, which their stock was 100 plus, and then it was 15 minus, and now it's back.
And they
60.
did the recap, and they raised money from equity investors,
right? And then also on 340 Madison, it's reported that Ohio State teachers, along with Scott Reckler's company, is buying that, which is a $600 million deal. Although there is almost $500 million of existing financing, but that's still a big $100 million equity check. So everyone's always said that there's plenty of capital sitting on the sidelines, and now that it's starting to move off the sidelines and actually being invested. So you have institutional investors, you have private investors, I think with the market being up and people generally feeling that there's a safety net in place. I mean, I think the most important thing that's going on right now is that sellers are going to have confidence that they can actually sell their assets and get reasonable prices, and you're going to start to see more offerings, which is going to make everybody feel like it's back to the way it should be.
That everyone survived. Well, at least those people that survived the debacle that we lived through in the last, let's say, 24 to 36 months. Joe, talk about the amount of equity that is coming into the deal. Is it just much more now, and that gives everyone confidence?
Absolutely, more equity, and there's also some inklings of actually financing and debt. We've had a number of great conversation with
financing. Imagine, I didn't think we'd even hear that word in the same sentence with commercial real estate.
Absolutely, we're starting to see trickles of that, and actually positive discussions we've had, and there's definitely a focus there. So not that it's to the extreme where it was, but there is definitely some inklings of financing.
Now, Howard, we've been talking about commercial real estate, specifically New York. Are we seeing similar signs across the United States in commercial real estate?
You're still seeing, the small to medium transactions are happening, throughout the country, but the transactions which I just mentioned, which are New York related, are really leading the country. I mean, you're not seeing you're not seeing major sales across the board. What you're seeing across the board are loan sales and special services selling assets across the country, individual banks selling assets across the country. But we're just really now seeing the beginning of these large individual assets coming to market, and that's why I think you'll see more properties coming to market as sellers see that they can sell properties. I mean, these properties are selling at 5 and 6 cap rates. Remember, when we met a year ago, people thought they were going to be buying real estate at 8, 9 cap rates. That's not happening. And I think also, as people have been waiting for this tsunami of debt to come, and to be able to buy things really cheap, and investors are seeing that that's not the case, and that's why people are stepping up and buying assets now.
Well, that was one of the things I wanted to press on you, is when we've been speaking historically, everyone seemed to always wait for a better price. And you're saying, at least based on what's going on right now, don't wait. There's no better price out there.
I was at a conference recently. I met with people from Starwood. I met with people from Angelo Gordon, other very smart, well-capitalized investors, and they're buying. They're not on the sidelines. They're not waiting. They're buying right now. One of the big auctions in New York was this Carlton House property, which was on Madison, which is on Madison in the 60s. It went for $170 million. There's $4 million of in-place NOI, and a fellow named Gary Barnett and Angelo Gordon bought the property. So they stepped up. They paid like a 3 cap. I mean, ultimately they intend to do a condo on it, I think. But the smart money is not sitting on the sidelines. The smart money is investing, and we've created the platform which. Well,
I'm going to bring that up.
Okay.
We're going to talk. Okay. No, we're going to talk about that. We're going to have more with Howard Michaels. He is the chairman of Carlton Advisory Services. More with Joe Korbar, managing director of Carlton Advisory Services. We're going to talk about $400 million worth of real estate. It's all online. You can even bid on it from your iPhone. We'll tell you more. This is Taking Stock on Bloomberg. This is Taking Stock on Bloomberg. I'm Pimm Fox. We're talking about the state of commercial real estate with some experts. We have Howard Michaels. He is the chairman of Carlton Advisory Services, and Joe Korbar. He's managing director of Carlton Advisory Services. Joe, talk about the $400 million worth of real estate. It's commercial as well as residential that is available online for people who want to bid on this real estate. Tell us about it.
Absolutely, Pimm. It's a fantastic opportunity for investors to get well-placed assets. There's roughly 30% of the pool is REO. Bid now.
Real estate owned.
Real estate owned.
By banks.
By banks. Actually, well-placed. There's office, there's commercial. There's $130 million in multifamily. Most of the assets have receivers in place. Clearly, they're well-maintained, located in Jacksonville, Miami, Fort Lauderdale.
It seemed a little bit like a poster for Florida, I got to say, when I looked up all the real estate. Why is that? Why is most of the real estate that's available online coming from Florida?
Well, if I can interject?
Yeah, please, Howard.
Joe's handling the $400 million sale and a couple of other sales, but the Carlton Exchange is selling over $1 billion of Florida real estate right now. $1 billion so basically a good part of the state is being.
Well, that's what I was thinking. It was almost as like half the state is available online.
We have a $400 million portfolio. We have a $300 million portfolio. We're launching tomorrow a $150 million, and then next week another $150 million. All regional and community banks that are looking to get these toxic and distressed loan and REO assets off their books.
Is there any estimate, and I know that property is, very specific, so you've got to go, building by building, shopping center by shopping center. Is there any estimate in your mind what the discount is? Not necessarily.
You always want to know what the price is.
Well, I always want to know what the price is. Is there any idea as to the discount, not necessarily to the stated price, but to what the banks were carrying this stuff on?
Let me answer it like this. Number one, you're 100% correct that each asset is different. A fully occupied multifamily apartment building, which qualifies for Freddie and Fannie financing, is going to trade better than a piece of vacant land where it's hard to get financing. So we can't really generalize. But Wells Fargo just came out with a study, and they said over the last 6 months that they've traded assets with a 60% loss severity. So that means they're basically recovering 40 plus cents. So on pure non-performing loans where you don't have a lot of income, there's an expectation that things are going to trade in that range. But, as Joe pointed out, we have some very high-quality assets. We've got some condo projects which are fully complete, and you're just buying the unsold units in what otherwise would be a successful condominium project. And we have multifamily properties that qualify for Fannie and Freddie financing. And then we have office buildings, which are partially
You've got conference centers that are available as well.
On one of the properties, we have 3 championship golf courses, and we have a 140,000 square foot conference center, which is perfect for an adult home or some kind of spa, health, wealth kind of center. So, for entrepreneurial investors, for people who are well capitalized, there's tremendous opportunities right now in the loan sale area.
Now, one of the things I noted, Joe, about a lot of the properties is shopping centers. Is this a situation where shopping centers are going to be sort of the poster child for commercial real estate? We haven't seen a lot of those transactions. Is this just going to be more and more shopping center sales?
I think so. In this pool, for example, there's roughly $50 million worth of value in shopping centers. From small strip malls to even large, we have actually a 55,000 square foot shopping center, all fully leased up, occupied in obviously well-traveled highways. located around residential communities. The issue was, in the boom, there was a lot of leverage that was going out, and obviously buying more with less, and obviously things with the economic downturn had a big impact. Doesn't necessarily mean that the real estate is stressed. It's not.
All right, we're going to continue the conversation. We've got more in commercial real estate, more with Howard Michaels, chairman of Carlton Advisory Services, more with Joe Korbar, managing director, Carlton Advisory Services. This is Taking Stock.